of Yellow Tunnel, and today we're going to have a strategy roundtable discussion where we talk about current market conditions, current pullback, see if the market has reached the top, what does the end of the year look like, and beyond, and how you can take advantages of the current market volatility, or how you hedge your portfolio from the current volatility. For those of you who are new, welcome. If this is your first live event, Joseph, not sure if I've seen you before. I could be, but say hi, say yes if this is your first live event. But Charles, Kevin, Phil, Fred, Bob, welcome back. Again, my background is technology. I work as a CTO and part of the executive team on several startups here in Chicago in the fintech space. One of them was Options Express, MediaOcean, Groupon. Love to work in a fast-paced startup environment. Started Tradespoon over 12 years ago, started Yellow Tunnel over 5 years ago. About a year and a half ago, we have Keith from Options Hotline who joined us, who does live trading room together. And his background is in the market making and working in the hedge funds. So he brings a trading perspective into the mix. And this is, I think you get a lot of learning material and a lot of signals and technology by joining our community. So thank you very much by being here. Disclosures are very important. I'm going to go through several trade ideas, actually several live positions. So it's important to read the disclosures. Trading stock and options involve risk, not suitable for everyone. If this is your first broadcast, I encourage you to visit optionstrading.com so you can understand the risk associated with trading stock or options. You can always pause the screen if you need more time to read the disclosures. All right, before we jump into a trading psychology, let's talk about current market conditions. They're very important. So I'm watching SPX, and we are trading below 50-day moving average, right? Below the 50% retracement. Basically, retest this morning, we retested the October lows, around 6,500 on SPX, cash settle index. So very important level. Bulls want to see this level hold the 6,500. If it doesn't, right? If it doesn't, then the next level would be 6,400 and potentially 200-day moving. It opens the doors basically to 200-day moving average. Whether we're going to reach 200-day moving average is not, I don't know. It will depend on the news, right? The next set of news is, NVIDIA earnings tomorrow after the close, and then September unemployment data, right? One of the reasons the market is selling off because of the uncertainty was macroeconomic data, government shutdown, and potentially another government shutdown in January. So people are concerned that the macroeconomic data, especially unemployment data, is not available. But meanwhile, from the private payroll information, ADP, we are seeing that companies are letting go people. It's very hard to find new job, and potentially when the new data comes in, especially in December, we might not have an October data point, but when December comes, first week of December, which is after this Friday in 2 weeks, and we're gonna get November unemployment data. If there is a negative surprise, right, and people are gonna be concerned that we might be going into a recession and the evaluations of the AI stocks are overblown, then you can have a sharp pullback, and vice versa, right? If unemployment holds up and end of the year, I think projections was 4.5, 4.6% unemployment. If we're at 4.5 or below, then I think the path of least resistance is to continue going higher. But again, based on the current market setup, as long as we're below 50-day moving average, that's 6,700. Right? There's a lot of positioning at 6,700, which is exactly 50% retracement. This is a large open interest of option contracts is at 6,700. As long as we're below that 67, 67.35, bears are in control, and they are pushing successfully lower. And major support now is 65.50. So by end of the week, if we're above 65.50, I would say bulls won and actually able to hold on their positions. If that two Bollinger Bands and the October lows do not hold, then I think the next step would be 6,400 and then potentially 6,200. First thing first, I would look at the interest rates. They're stable, right? The 10-year, 2-year, they're not dropping, right? Usually if there is a sense of recession, the first thing that happens in front of the yield curve, 2-year, is going to have a precipitous drop, right, with the fear of recession. We don't have that yet. So that's a good news. High yield did drop. We're retesting same thing in October low. So risk, proxy for risk taking, whether it's a Bitcoin, small cap, junk bonds, they're all retesting October lows. They're all sitting on very important level. High yield is a 200-day moving average at October lows. VIX jump, I think we had a 20, almost 26, 25, 26 print. We're retesting again October high, October lows, October highs in volatility when the new administration announced potentially 100% tariffs on China, right? And the initial reaction was VIX got to, I mean, as high as 29, almost 30 level. So VIX today got it to almost 26 level, pulling back. Spiders holding on, right there. You have a quick reversal from the October lows. Small caps are actually turning bullish. I mean, not bullish, but positive, right? But we did have, 2 standard deviation move to the downside, right? Basically, almost 10% drop, but still trading below 50-day moving average on small caps. Arc Innovation turned positive. So high beta stocks looks like finding a bit. And Bitcoin, right? Sharp drop below 200-day moving average on Bitcoin, basically trading at May low, right at the May low. Next level would be, if this level doesn't hold, then potentially 80,000 to 75,000. So all of the practices for risk taking are still pointing, the market internals are weak, and NVIDIA and unemployment data tomorrow has to save the day, right? That's the only hope for the bulls. Right, this unemployment data for September will be better than expected, and that tomorrow NVIDIA earnings is going to show, a strong beat and a positive forward guidance. So those are the 2 main events. If you look at how people are positioned, well, let's first look at aggressive power trader. Our model. What does our model say based on neural networks? You get aggressive power trader, you get signals. Today, FedEx was a signal. FedEx, actually, that's bullish argument that, transportation is actually doing relatively well, right? FedEx is actually grinding higher, despite market correction. That's usually good. And spiders, you see for the next 10 days, it does see potentially we can continue going lower, right? The 10-day, we're already at 663, right? Support is 65, 67. But 1 month, 2 months, and 3 months, basically shows that we're still going to revisit 700 level. So that tells me that short term, yes, we could be under pressure, market could continue pulling back. But in the next 10 days, it does see rebound, right? And it does see rebound to potentially all-time high by end of the year, right? That's the second scenario. So all news aside, model basically says the long-term trends are still intact, they're not broken. And unless unemployment, there's a negative surprise in unemployment or NVIDIA or other macro news, then the path of least resistance is to rebound from the oversold conditions. If you look at the SPX, let's look at SPX. Gamma exposure. Alex, welcome back. Charles. We have 2 Charles, Joseph, Kevin, Phil, Tim, welcome back. All right, so you see we're still trading in a negative gamma. So what does a negative gamma means? You don't have to be an option trader to understand this, to know about this, but it's important information to determine support and resistance. And negative gamma basically means that the pullback could accelerate, right? And that's why you see these sharp drawdowns, because we're trading in a negative gamma environment, and especially with the expiration week, right? Tomorrow we have VIX expiration, and Friday we have equity expiration. So right now, most of the contracts, the good news is concentrated in December. So about $60 to $80 billion worth of December contracts. In November, $45 billion contracts. So a lot of the positioning is going to come off, right? And when positions come off, based on the news, that could accelerate the move to the upside or to the downside, right? So I would expect by end of this week or by end of next week, you would have a sharp reacceleration either to the upside or to the downside, and that will just depend on the news, right? So positioning, again, 6,700 is the main overhead resistance, and now support, we basically at 6,650, 6,500, right? October lows slightly below that level. So if I look at the end of the year, right? If I look at the December expiration, where that's the majority of the option contracts reside in SPX, you know, the most liquid probably name on the market. This is how large hedge funds or wealth managers hedge their positions. You know, you have one standard deviation. What happened to the one standard deviation? We need more strikes. Yeah, okay. So you have one standard deviation. We are at all-time high, 6,900, 7,000. You see a very large position, right? The skull wall kind of said that, you know, this is a major resistance, right? So one scenario, NVIDIA is going to hit a home run. Unemployment is stable, right? We don't see a large, you know, jump in unemployment rate. And then we are back to 69, 7,000, maybe, you know, all-time high or even new highs, right? Scenario number one, like Tommy Lee's of the world, right? If you turn on CNBC and Bloomberg, there are always people that are bullish, you know, always bullish, right? And then they are calling for retest of all-time highs, right? Totally plausible scenario, totally plausible scenario. Scenario number two, no, we're trading in a range, right? Maybe we have a tick up on unemployment, maybe inflation ticks up, maybe we impose 100% tariff on China because they're supposed to buy soybeans by end of the year and they're not buying soybeans, and Trump loses his patience, and yeah. And then we have scenario number two. And scenario number three, you have a rise, sudden jump in unemployment, right? Plus, you know, tariffs on China, plus, you know, we're going into the midterm elections, and, you know, focus needs to be addressed in, you know, on affordability, right? Affordability issues. And, you know, the data shows that, you know, people are concerned, they're not, you know, losing jobs, they can't, you know, pay for their groceries, for their rent, and, you know, and signs of recession, right? Deeper recession. You have scenario number three. So how many of you say by end of the year we're going to have one, at least get close to all-time highs? How many of you say no, we're going to keep going lower, maybe even get to 6,400, right? Maybe 6,300, right? One standard deviation. And then how many of you say three, right? Recession or signs of recession. Alex, Charles, another Charles, Joseph, Kevin, Phil, Tim, another Tim. Tom, what do you guys think? Kevin, 3, thank you. Phil is 1, Alex 2, Charles down. Okay, Phil 1. All right, so we have the entire spectrum, which is good. That means it's not there's nothing wrong. Nobody knows exactly what's going to happen, but you can run all three scenario cases. I'm going to go with one. I'm going to stay an optimist. I think from seasonality point of view, usually end of November and December are bullish from seasonality point of view, but I do realize that short-term market could be volatile and choppy, and we could have these larger drawdowns. So if I see 6,400 or 6,300, I would not be surprised, but I think buyers will eventually step in before the end of the year and push the market close to all-time highs. But first thing first, we need to see if the October lows will hold, right? These are the October lows, right? This level, we want to make sure that markets hold. All right, so how do we help on yellow tunnel? So we have aggressive power trader, right? We already showed aggressive power trader that basically tells you 665 is your buy zone, right? When the market drops to 663, potentially this is where you want to start thinking about buying. This was posted yesterday, and you can see kind of, you know, almost to the penny, right? We reached 655 this morning, and now we're bouncing back off of 6. So we overshot, right? So overshot the prediction. overshot the prediction. So now what used to be a support, right, is now going to be overhead resistance. For the bulls to take over, ideally we want spiders to close above 6665 level, first thing first. And it also shows you long-term trends. And you can go into AI analysis and say, okay, NVIDIA has earnings, Apple had earnings, Cisco had earnings, and it will show you going into the event what the model thinks that stock could be, right? It sees 10 days, potentially could drop to 170, right? Unless there is a large negative surprise on the earnings. Long term, it does see that the uptrend has resumed, and it does see that in the next 3 months, NVIDIA will regain its momentum. So that's AI analysis on any stocks that you have. You can also leverage your account if you want to buy FedEx option. Instead of buying 100 shares of stock, which is $26,000, if you want to do leverage, you can buy one contract for $3, right? So spend only $300 if you think that FedEx could continue that upward momentum. And again, you have different trends analysis. If I trade any of these signals, you'll see orders, you will see my positions. You can look at the history of the signals. What were the signals the day before or 2 days before? And you can watch the recordings. This is where Keith and I, we do live trading room. You can see our recordings from live trading room. You can also see strategy roundtable discussion and active investor workshop. If you want to learn more about options or spreads or technical analysis, you can type in, and we have a very large library of videos on different topics. So that's aggressive power trader. The next one is weekly power trader. This model doesn't run every day. It takes longer term view. It needs weekly data, and it gives you signal that you can hold for next couple of weeks, right? Sometimes I hold them for 5 to 10 days, sometimes 10 to 20 days, but these are meant to be longer term signals. Again, we suggest to have only 4 active positions at a time with maximum loss of 2.5%, so you don't over trade your account. But for this week's signals were American Express, right? You can see today, actually, American Express, it's doing better than the rest of the market, right? American Express is actually turning positive. So the idea is to find signals that are doing better than their respective, peers like Visa and MasterCard, right? You can see Visa, MasterCard in a strong sell-off. So American Express is doing better, right? And it's doing better than the overall index. That is the kind of signals we're looking for, right? That can give you better than, or Bank of New York, right? That gives you better momentum behind the stock. Because I still think this is not a high beta environment, right? Where you invest in high beta, like AI stocks. You can see some of the AI stocks actually turning positive, but like IONQ, right? You have a sharp 50%, 60% pullback. Basically shows you that potentially this is exhaustive, right? High beta stocks like IONQ or MP, rare earth metal, they have very large drawdowns, 40%, 50%. So if you invest in these stocks, you have to size your positions appropriately, right? And then you have Cisco, BSX. So this is a list of signals that gets published every Sunday, right? Every week, every Sunday, right? Usually I use 2 to 5. I mean, when VIX is under 20%, under 20, I would use 1 to 2% stop loss. When VIX is above 20, I would make it wider. Maybe 2 to 4% stop loss and just reduce your position size. But no matter what you are trading, the most important is that you don't risk more than 2.5% of your account value per position. So that's weekly power trader. If you want to know what I trade, dynamic power trader, right? So you can see actually I have Caterpillar, I have JetQ, I have Morgan Stanley, I have QQ Hedge. You can see all of my orders, right? I added to Caterpillar on a pullback, initiated exposure to healthcare, BSX positions. So some of them are stock trades, some of them are option trades, because we have different subscribers that have different comfort level. These are real positions, real orders. You can enter your phone number and get SMS message every time I trade. You can look at the history of these signals, right? Again, once every week on Sunday, and you can perform AI analysis, right? And same thing, you have access to live trading room. You know, we have a morning session, closing bell session. Some of them I lead, some of them are Keith manage them. So this is, you know, a lot of content and a lot of great material that, you know, I encourage you to use. What else? Okay, so that's dynamic power trader, earnings power trader. So we had Qualcomm trades, we had Cisco trade last week. Every week I try to do a trade that has asymmetrical return, right? Where you can have a well-defined risk, but your return is outsized. And earnings is a special time where you have that volatility spike, like today, you know, Medtronic, right? Medtronic is moving beyond one standard deviation move, right? Medtronic usually does not move 6 to 8%, right? So you still have stocks, especially healthcare, right? Because market sell-off, people gravitate over healthcare, consumer staples, utilities. You do have 2 standard deviation move. So, you know, we have retail stocks announcing earnings, TJX, Walmart, and Nvidia, right? So tomorrow, before the close, I will place Nvidia trade, right? And sometimes I sell premium because VIX is elevated. So yesterday at the closing bell, we talked about selling iron counters on Home Depot, on JD, some of the Chinese stocks. So same idea. So you will have, if you have the service, then you will see my orders, my positions in Nvidia. You can enter your phone number. You'll get SMS message every time I trade. You get an email when I trade, and then you can look at the history of these signals, right? And recordings from live trading room. This is very valuable information because you get exposure to Keith from Options Hotline. You have exposure to me, and we help you navigate current market volatility. We have a lot of professional traders. We have a lot of money managers. We always bounce ideas against each other, and I encourage you to take advantage of that. So that's Alex, earnings power trader. If you're still interested, sign up. You can click here and sign up for that. Last couple of weeks have been pretty good returns. And then finally, Profit Accelerator. Profit Accelerator, if you're more comfortable trading stocks, then you can you know, access Profit Accelerator, and these are stock and just stock positions. On the dashboard, we do have a guide. You can download the Getting Started guide. Keith does one-on-one coaching. We have the whole coaching team. So if you're looking for one-on-one coaching, I do encourage you to either click on contact and schedule consultation with Keith, or click on coach and fill out information. One of our coaches will give you basically free overview of the program, and, you know, build a custom training plan just for you. So I encourage you to take advantage of that offering, because very important when the market rises, right? We talked about this in the live trading. Very important is to predict, not only predict what the market will do, but predict how you will react, right? If you're bullish and you think you answered one and market is going to reach all-time high, well, what happens if S&P drops another 5 or 10%, right? 6,300, 6,000 potentially. At what point do you have stop losses? What's your exposure to the market, right? So the kind of control basically says that you want to concentrate on things that are within your control, right? And recognize certain biases, right? One of them is prospect theory, right? Prospect theory that basically says we have different relationship with money. All of us are different, and we have different relationship with gains and losses, right? They're asymmetrical. So understanding some of these biases that we teach, you know, in one-on-one coaching program, or we teach, you know, in live trading room, are very important. But you concentrate, the kind of control basically says concentrate on things that are within control. And right now, the most important is cash. If you're on margin, you probably want to raise cash. If you, months ago, you were at 30% cash, maybe now it makes sense to be 50% on cash. And then draw down, go through positive and negative visualization, just like we did in SPS, right? Close your eyes and envision what's going to happen by the end of the year, right? S&P at all-time high, how do you feel? what does your portfolio look like, you know, and then, you know, write it down, you know, how many positions you have, you know, evaluate your portfolio, and then close your eyes and imagine we're at 6,300 or 6,400, right? What does your portfolio look like? You know, how do you feel? And that will help you determine the position size, right? These positive and negative visualizations, kind of asking yourself, what if market goes against me, right? Or if you said bearish, right? You could have said 6,300, but market is at 7,000 by end of the year. You know, how do you feel? You know, and what does your portfolio look like? And those exercises are extremely important to avoid fight or flight response. You know, game theory is important, right? What other people are thinking, right? What is money managers are thinking? What are the professional traders thinking? You know, treat it as a business compounding investment, right? Look for reasonable returns, easily achieve targets, schedule, you know, build a trading plan where you set the goals months over months, week over week, quarter over quarter, and, you know, it takes time to internalize this information. It doesn't happen very quickly. So again, just to repeat, 30% in cash, portfolio drawdown. This is number of positions. I propose to have 4 positions and not to risk more than 2.5%, especially if you're new to trading or you're new to yellow tunnel. As you get more comfortable, and you know, then you can grow your portfolio and have more than 4 positions. And you know, but in terms of risk, even if you're professional money managers, you talk to professional money manager, their drawdown is 17%, you know, 20%, but never more than that. Going to hedge, you know, I have a QQQ hedge position in case market does continue to pull back. That's important. Look for these ABC patterns, right? We clearly have ABC patterns right now. And again, wait for 2 to 3 days to confirm the trend change. Short term, you know, bears are in control. So unless we have 2 to 3 days of higher highs and higher lows, you know, bears are in control. Okay? All right, any other questions? So what else? I mean, you can see today, I mean, we have a rebound, at least an equal, right, reversal. We made new lows and equal weight S&P value stocks, they're reversing, actually turning positive. Small caps, same thing. So we're reaching oversold condition. Is this an extreme oversold condition? Probably not, right? If you look at the percentage of stocks above 20-day moving average, only 30%, that's October lows, right? In April, during Liberation Day, we were at 10%, right? So I mean, it is oversold, but it's not extremely oversold, right? And you can, same thing could say percentage, right? So sentiment is bearish, but not in extreme levels, right? Percentage of stocks above 50-day moving average. I mean, we just reached, I mean, we actually broke through November lows, we broke through October lows. You know, if this level doesn't hold, we could reach again April lows, right? Which, you know, is significantly lower. And same thing goes with VIX. So I would look at these ABC patterns, right? Especially on QQQ. So we want to be above 600 on QQQ. So you do have A, B, C, right? You have a sharp A, you have rebound to B, then you have C, right? The question is, do you have D and E, right? 1, 2, Elliott waves, or they usually come in 3 or 5s, right? Right. So that's the question. You know, will this level hold, and will we, you know, will we have, you know, rebound and then another, you know, retest? That will depend on economic data. I think at this point, government is reopened, everybody's heading to the breaks. I don't think we're going to impose 100% tariffs on China by the end of the year. Right? That doesn't make sense. So the only unknowns are, and NVIDIA, I assume, is going to have decent earnings as well, right? We have semiconductors, they're all, you know, obviously benefiting, you know, whether it's Cisco or Oracle, they're all benefiting from the AI play. But this is a perfect example where you have this unprecedented move in Oracle, and at this point, it gave up all of its gains, right? So the people are nervous, right? So even if you have a strong earnings and you show a huge pipeline of the AI orders, people are nervous in terms of, you know, how much money you spend on your capex versus how much revenue you're generating from these AI models. All right, any questions? Alex, Charles, John, Kevin, Phil, Tim, Joseph, join. All right, we have new people coming, going. Any other questions? We'll just quickly maybe go through different asset class, assets, not asset classes, but industries. So retail sector is oversold, kind of retesting multi-week low. Energy looks like it's catching a bit. Metals and miners looks like they're stabilizing. Consumer discretionary are weak, right? We have retail stocks announcing earnings. Tesla is under pressure. Healthcare, right? Risk off. Healthcare broke out and almost at 2024 high, so healthcare is on strong uptrend. Utilities on strong uptrend. Consumer staples oversold but bouncing back, right? People are looking for defensive plays. Industrials are actually turning positive, and financials are turning positive, but oversold, right? You see kind of a multi-months. We're back to July level on XLF. Same thing in XLI. We haven't gone anywhere since July. So biotech is one of the strongest sectors, right? So XBI continues to grind higher. REITs not going anywhere. VIX is elevated. TLT didn't go anywhere. QQQ is above 600. A lot of positioning at the 600 on QQQ. So that's kind of the level I watch. Once we're below 600, I think bears are in control. As soon as we jump above 600, then, bulls are, we'll see where we're going to close today, but this is positive. And you do have a very large position at 600, which has been there for quite some time. All right, that's all I have for today. All right, thank you. Thank you, Kevin. All right, guys, that's all I have for today. Thank you very much. Have a great day. I appreciate your time. Thank you. We have a lot of people, and I hope to see you in the live trading room. Alex, sign up for an Inspiro Trader. And everybody else, take advantage. We do give 30-day money back. So if it doesn't work out and you're not your style, then that's fine. All right, Charles, thank you. Thank you, guys.